Welcome to Copytraders Club, where you can learn how to make more money copy trading. I'm Gavin McCauley, my name and username on eToro. Today we chat with a PI who I stumbled across in an unusual way, and who is something of an unusual PI. Not for him the usual stocks and the same old commentary. He's a bit of a maverick and, as you will hear, seems to be obsessed with nipple twisting. Here we go. Episode 15 of Copytraders Club, and we chat today with a Hungarian PI who is relatively new to eToro, but has certainly made an impact on his followers and copiers. Our chat lasted way too long, and it saddened me to delete what I had to. So we go a little over an hour here, but some of the best stuff is at the end. More free quality for you, dear listener. I suspect he will be around for a while, and so we check in with him early in his eToro career. His limo has just arrived, and here he is. Let me try to greet him in his mother tongue. Levente, hello! Üdvözöljük a Copytraders Clubban.
Szia, Gavin, nagyon örülök, hogy itt lehetek. Which actually means I'm very happy to be here and thanks for having me, but I have to say that pronunciation was almost perfect.
Ah, too kind.
It was absolutely top-notch.
All right. Well, in English, welcome indeed to Copytraders Club. As you may know, the first step upon arrival here is to get past reception via a series of quickfire questions. Are you ready for those?
Absolutely, let's kick it.
Username on eToro.
Liziapukaja.
Date you joined eToro.
I'm not sure about the exact day, but it was the end of February 2020.
Year of birth.
1986.
Place of residence.
Now in Hungary, but moving to Mexico in 3 days.
Profession.
I'm a professional copywriter.
Briefly state what you aim to achieve on eToro.
What I want to achieve is to make money and also help others to make money.
Name one of your investing heroes.
Bill Ackman.
Name one of your favorite investing books.
I know it might sound boring, but it's The Intelligent Investor from Benjamin Graham.
That completes the formalities. Follow me as we now make our way into the VIP section here at the clubhouse, to the hallowed sanctuary that is the Copytraders Lounge. Levente Lavrinyuk, aka Lavrinyuk Levente, aka Liziapukaja. Are you ready for this magical transition?
Absolutely.
So let's sit back and relax in the splendid surroundings of the Copytraders Lounge. Levente Lavrinyuk, or as you just explained to me before we started, your real name is Lavrinyuk Levente.
Yeah, exactly. We have this weird thing in Hungary and a few other places in the world, I guess, that we have our surname and first name the other way around. So we put the family name first, followed by the first name. So yeah.
And speaking of names, I was trying to do my research into your username on eToro rather than just asking you about it. And I was looking up, the surname Pukaja or Pukaja, trying to work out, is this a famous person, a famous Hungarian? Hold on, don't answer, because I think I've got the answer. I think I worked it out. It's not Liziapukaja, it's Liziapukaja, which must mean you have a daughter called Lizzie.
Exactly. So yeah, good work. Yeah, absolutely. My little one, her name is Lizzie, and when I joined the eToro, I was sitting there in the application form, I was thinking about the username, and the first thing that came to me was like, actually, I am her dad, so I put this in there. Later on, when I obviously dig deeper on eToro and became a popular investor and this kind of stuff, I was thinking of maybe that's not the most the best choice of names because it has no relation to investing or anything. But it turned out that many people was actually loved it because of this little family kind of relation. So yeah, after all, I'm very happy I picked this name. It brings me luck in some ways.
Because it means Lizzie's dad.
Yeah, exactly. Pure translation. It means the dad of Lizzie or Lizzie's dad.
Okay, so you're from Hungary, a landlocked Central European country with 7 land borders. I wonder if the listener would know what those 7 borders are. I'll come back at the end with the answer. Now, are you in Budapest?
No, I am in a very small village in the northernmost part of the country. I'm very close to the Slovakian border.
I was just looking up the history of Hungary as part of my research for this. Incredible history, a beautiful city, Budapest, and the architecture on the Danube. And much of the history is tragic through the Celts and Mongols, Romans, Nazis, a little bit of everything.
Exactly. We have a very sort of like black humor and joke around in Hungary about all these conquerors came and they just loved Hungary so much they decided to stay too long. Now, being an independent country, you can definitely tell that there have been a few positives of these mixing of cultures.
And speaking of mixing of cultures, you're about to mix Hungarian and Mexican. Tell us about that.
Exactly. Yeah, we just feel a little bit fed up with the whole lockdown situation and this new normal that the coronavirus basically introduced actually more than a year ago. So I'm in an extremely lucky position because I can bring my work with me. I'm pretty much location independent. As a copywriter, I can just grab my laptop and write. So with my wife and obviously with my little one, Lizzie, we decided it's time to move somewhere where the weather is nicer, the food is a little bit nicer, the people are a bit different. So now we made a decision, and actually, yeah, the time is up. We are flying off in this Saturday.
Let's talk about how I came across you. I was watching this YouTube channel called The Masked Trader, and I see someone has posted the video on your feed. I don't know if you've had a chance to see it yet. I'll put the link in the show notes. But in it, he recommends his top 3 PIs, Prototype VR, J Nemesis, and Liziapukaja. This guy has a very new channel and a really bizarre one. And let me describe it a little bit. He's wearing a crazy mask with big white eyebrows and whiskers, and he's puffing on a fat one, and the blue-grey smoke is swirling around his beard and his fake whiskers and his fake fat nose as he delivers his propaganda commentary. And his considered opinion of you is, and I quote, "This guy's fucking brilliant." I believe that's a Ray Dalio quote. He goes on to say, "I love his style of writing and the way he explains what he's doing to his followers. His fundamental analysis is absolutely on point. All in all, I am a massive fan." Have you seen that video?
I did, yes. I think I've seen it about 15 times. If I'm completely honest, because all in all, it was amazing receiving this kind of positivity and feedback from anyone, really. I mean, I do these writings, these scribblings on eToro, and I like to think that it delivers some kind of value to those who read them, either informing or educating or even entertaining. And then something like this comes back, it really makes me feel that it's worth it. So when I saw it, when someone actually posted that video under one of my posts in a comment and also sent me a message with lots of exclamation marks saying you've been featured. And I watched the video. First, obviously, the first impression, seeing that mask and seeing all the swirling smoke, was like, "What?" But then I listened to it, and especially I'm a big respecter of Jane Nemesis, but being placed by the mask trader above him is a big honor on its own. So yeah, I really hope I can live up to his expectations, everyone, all of my followers and the copiers' expectations. But yeah, all in all, that video was a really, really, really positive thing, and I truly touched me. It was a great feeling.
Well, it sent me to look you up on eToro, and indeed I was struck by your writing style and the composition of your portfolio. So that's really why I thought, oh, this guy would be an interesting PI to talk to. You seem quite an unusual PI. So many PIs' portfolios and profiles just look the same that I glaze over when I'm going through them, but yours was pretty different. Let's have a question from the book, The Art of People. Can you give me a number between 1 and 10?
Let's go for 7.
Number 7. If you weren't doing what you're doing today, what would you be doing and why?
I would, obviously today I spend most of my time writing, so was not only on eToro writing those posts, but also as a day job and all sorts of different writing projects. But if I could do something else, I would still do writing, but write for fun, only write like novels or, not something that someone pays for, but something that just for fun.
Okay, let's take a look now at your bio and your pin post. We just want to run through these two things kind of on a surface level before we get into the real substance of your investing style. So would you like to read your bio?
I invest to learn more about the world we live in and make some money in the process. And I'm here to find investment opportunities where others don't look, deeply understand the company's business model, products, and their risks, make investment decisions based on facts, logic, and common sense, creatively balance and diversify my portfolio, also read between the lines of market news, company updates, and balance sheets, hedge against risk via short positions in different asset classes, be open, honest, and helpful to my copiers, regularly post about portfolio changes and investment ideas, and also copy me if you seek exposure to overlooked but highly promising sectors, and copy me if you accept a little extra risk occasionally. Lastly, copy me if you like coffee, just for fun. Make sure you copy open trades and give me at least 6 to 12 weeks to deliver on my promises.
You recently became a champion popular investor.
Yeah, finally made it. Obviously, that's mostly down to the people who decided to copy me, to place their hard-earned cash on me. So without them, I wouldn't be sitting at this champion tier. So
you're a relatively new PI and on the up. Your Copier numbers are currently, at the time of recording, 77 with assets under management between 100 and 300K. Are you happy with progress so far?
absolutely. I was very surprised. I mean, the video from the Moss Trader, a huge thumbs up for him, and a huge thanks, helped a lot. So as soon as that video hit my comments under that post that we mentioned, I saw a big jump in people started following and also copying. And also, I think considering the market at the moment, how things panned out in the last 2 months and how other PIs are doing, I'm extremely happy with the progress and the numbers.
Trades per week, 3.84. Average holding time, 1 month. Risk score. Is your risk score fair, do you think?
I think it is, although if I'm completely honest, this risk score that eToro introduced to measure the risk of certain trader, whether a PI or a non-PI, even among PIs, we often have conversations and also arguments with how this risk score is actually being calculated and how whether or not it truly reflects someone's risk appetite. Because you can take a look at two different portfolios and see the number of positions, see the exposure, see the sector, see the all sorts of factors in that portfolio, and you could say to a portfolio that eToro says it's a risk level of 4 to be, in my opinion, much riskier than the other one that is classified as risk score 7 by eToro's algorithm. So in my particular case, considering that I came all the way down from risk score 8 in the beginning because of those wild moves, I think being at 5 is fair. I spent quite a lot of time, a few months, on 4. So I think at the moment it perfectly describes my risk tolerance and risk appetite.
Yes, your max risk at the moment is between 5 and 6.
Yeah, exactly.
I did an episode on the risk score and what it is and what it isn't, and the wording that eToro uses to describe it. Conclusion being, and this has been backed up by other copy traders I've spoken to and PIs, that the risk score is your initial indicator and it gives you some idea of risk, but it's certainly not the be all and end all.
Absolutely.
There's still much more you need to do to build up a fuller picture of risk. And I think that's the problem with it, is that it's overstated what it is. It shouldn't be oversold as the exact risk score a PI brings to your portfolio, I think is the wording.
Exactly.
It should say this gives you an indication of the risk involved in this PI's portfolio at the time when he purchased these assets and how they relate to each other, and is as much a measure of volatility as anything else.
Yeah, I can totally agree with that it's an initial indication. So I would say that because there are 10 levels, we see actually from 1 to 10 on a risk score. If you just used 1 for someone who is taking very little risk, invests in assets that are by nature, like bonds, are more fixed income, that are lower risk profile. 2 for someone who is at mixed risk, and 3 who is a vagabond, badass, uses leverage all the time, goes short, has few positions in his portfolio. Then yes, but breaking it down to 10 and presenting it as a clear indication of someone's risk exposure is a bit odd.
Okay, before we get into what's in your portfolio, let's deal with those crazy, wild months that you referred to, which are part of your 2020 return, which was 238%.
Yeah.
And despite what I thought that was going to show me, there was no crypto involved. And most, but not all, of the gains came in March, 90%, April, 43%, and May, 21%. Now, we all know what was happening around March and April of 2020. So how did you do it?
Okay, basically, first of all, these numbers are slightly misleading. I'll explain why. When I joined eToro in February, it was because I saw what's going on in the world. I was investing before for more than 10 years, so I had my investments in other places. And I decided that I see a direction here, I see what's about to happen in the coming months, and I want to speculate on this hypothesis that I had, namely to bet against airlines, bet against the tourism sector, any industries that I expected to be shaken badly by the pandemic. Back at the time, it was only concentrated around China. So what I did, I have a very firm rule, a very strict rule to only use 10, maybe 15% of my total capital on speculation. So I freed up this money, and I was looking for a platform where I can short easily without that level of commissions that if you short without a CFD, so if you do the real thing, if you borrow from a broker, that those commissions are significantly higher. So eToro seemed very appealing. So I decided to, okay, let's deposit this 10% of my capital and use it for speculation. But from the point of view of someone who saw my profile on eToro, they saw that, oh, look at this guy. He uses his entire money, like all of his eToro funds, to bet against, to short the airlines. So when my bets paid off, when the airlines went actually nosediving, then that money, that 10% of my real actual capital doubled almost in March. That's a 90% up. And that's brought in followers, copiers, made me look like I'm someone who who has a crystal ball and doubled his money. But in reality, actually, in fact, I still had 90% of the rest of my capital. And because of the meltdown, that side of my money was actually damaged. So I also I took a big hit on my normal investments because of that March, April downturn. But strictly within the eToro universe, things panned out extremely well because it gave me this kind of this kickstart for those months. I was following airlines before because I'm a huge fan of aviation, and I like to think that I understand the industry pretty well. And because of that, I had my number one choices who to short. Norwegian Airlines was an obvious victim, and a few others. Also, Hertz, the car rental company that also struggled even before the pandemic, was an obvious candidate for. Actually, they filed for bankruptcy back at the time. So all those trades sort of skyrocketed my eToro career with those stats.
Yes, it got you off to a flying start, as you say, but that's because you're being copied by people chasing the big numbers. So if you look at your Copier chart, it spikes and then it drops down again. And now you've had to sort of slowly rebuild as the initial Copiers fell away once reality took hold and you weren't repeating big numbers every month.
Maybe yes. I'm pretty sure this also has to do with it, but more because I hit the risk score of 8.
Okay.
And I have been copy blocked. So what happened? A few people wanted to copy me even when my May or June results was still in the range of 10%. So I was still taking quite a lot of risk, but it paid out and my numbers were good. So people wanted to come on board, wanted to join. But first of all, I made it very clear back at the time into my post that, guys, these are one-off returns. So these are absolutely unsustainable. So don't copy me with the expectation that I'm going to deliver 50% or 60% a month, because it's just, if it happens, I'm the happiest person and you are happy also the second happiest. By May and June, the market completely changed from its perception of the pandemic. So the opportunity, the window for this type of play was gone. So because of that, I try to make this clear. And yeah, maybe some people just decided, oh, okay, if there is no money any longer on the table, I'm not interested in copying. But also the numbers went down because no one came to top it up. It was only one-way street. Someone leaves, but there was no possibility to copy me again. And this situation lasted for about 5 months. So I had to work on my risk score, bring it down to 6 or actually below. And then I had to ask eToro customer service to please just look into my case, see how I behave. Just, so I'm a good boy now. I'm not taking that much risk anymore. I'm not using leverage anymore. And then they decided, okay, cool, you're fine. You're back to being copied. And that was the time when actually they also took me on, accepted me to the Popular Investor Program.
So to be clear, can you answer the question, how reflective is it of your current strategy?
I would say about not even half. So I'm still looking for those opportunities when something is so badly mispriced, like the airlines were mispriced back in last March. So the market completely ignored the risk of what could happen if the virus if it becomes a pandemic. Because back at the time, it was only a local outbreak in China. This kind of mispricing only happens maybe once in a decade or once in a few decades when the market is so unrealistic in its expectations. So because of that, saying that how reflective that is in my current strategy, I have to say that at the moment I have to focus on different market dynamics when I create my strategy.
So those big early winning months can also count against you in a way. People think, look at this guy's results. He's a flash in the pan. He's a gambler, not to be taken seriously. But however, I would point to your last 6 months. You're up nearly 32%. So that's an indication that you're not only going to make solid returns when the market is crazy.
Yeah, I like to think that too. But to be honest, when if someone looks at me and looks at those numbers from March, April, May last year, and thinks that, this guy is a gambler. He made some big bucks. He did bet on the right horse and he won, but he might be a one-trick pony himself. I started writing these posts and trying to be as detailed in my analysis towards my followers and copiers as I could be. So anyone who stumbles across my profile and looks at my analysis and say, "Oh, this guy is actually putting the hours and the work into that." So winning on the Hertz short, when I shorted Hertz heavily and it paid out, I was posting almost every day to try to explain the followers and the copiers what's about to happen and why. And I think that was my most certain game in the last 5 years, when I was so 99% sure that they're gonna file for bankruptcy. They openly admitted it in the news, but the market didn't listen.
Mm-hmm.
So if someone comes by and says, "Oh, these numbers are gambler numbers, I'm not interested," and they don't take the time to read on, then actually they do a favor for both of us, because I'm very happy if someone decides to copy me, but I always make it loud capital letters that read what you buy before you buy.
Well, I'm very glad to see that in your bio you don't make a big deal of your eToro lifetime returns, as I see some people doing, especially those who start with a small amount of money, maybe buy Bitcoin, and it goes crazy for a few months, and they make, I don't know, a couple of 100%, and now they're referring to their lifetime returns on eToro being 300%.
Yeah.
When most of that came from the very start. I find those claims to be disingenuous when I see those on a PI portfolio, on a PI bio, and a red flag actually regarding the honesty of the PI. It may not be untrue what they're saying, strictly speaking, but it's definitely misleading and a trap for the unwary copier.
Exactly, and there are two things to this. One is that when you go to someone's profile and look at the stats, I'm not sure if has been fixed, but it's kind of interesting how eToro's algorithm calculates the total return in the stats and in the chart. At the first glance, making a 238% throughout the year is, wow, it's like tripling my money. But in reality, if I look at my balance, it was more like between 100% and 200%.
Mm-hmm.
I would say anything above 20% a year is fantastic. It's incredible if you take into consideration the history of the stock market. So we live in times when people can throw around numbers like 100%, 150%. It's crazy. It isn't how this game works on the long term.
Hey, hope you're enjoying today's show. I'm sure you've subscribed already. If you're a successful copy trader, happy to share what you've learned. There's no need to have a public profile. Please get in touch. Otherwise, listener, the bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. Let's have a little look at your portfolio.
Sure.
Now, you have a tiered allocation system, with the top tier being 4.78%, the bottom tier being 1.59%, and 3 or 4 tiers in between. You've got about 40 stocks, quite a mixed bag, but with some common themes. I went through them, and I would say the themes, generally speaking, are Chinese companies, Baba and at least 3 others.
Yep.
Precious metals, a miners ETF, platinum ETF, a copper company, a silver ETF, REITs. You've got a bunch of different real estate investment trusts in France, the USA, the Americas, Germany. Some other sectors represented, like energy is well represented, a little bit of tech, healthcare, but also water. Now, that's not something I've come across before on any eToro portfolio. A discussion about the investment opportunity in water. And it was also the subject of one of your latest lengthy posts to your copiers, which is a very good example of the quality of your communication. You know, the way you write your posts is unlike any I've seen on eToro. Always very entertaining.
Thank you.
Maybe we could talk a bit about water, and that would give a bit of insight into your mind and your approach. What is the opportunity? Are you just dipping your toe or jumping in at the deep end?
I would say jumping on in the deep end. So definitely, when I opened these positions, it was a result of a long research into the field. So let's start with the basics. The world is changing. Okay, it's a cliche, but it does. People have a different level of acceptance to these changes. We're talking about the climate and the environmental impact. And in regards to the stock market, it's so funny that the stock market is tend to be very slow to react to changes that they never seen happening before. So as far as we can remember in our lifetimes and in the lifetimes of our grandparents, water has never been an issue, never been a shortage, except of a few areas in the world that has always been water stressed. In the developed world, it has never been an issue to get access to fresh water. But this is changing. People listen to science. If you make research into this topic, scientists are basically ringing the alarm bells for years now that these tendencies are happening and they're worsening. When I lived in Tel Aviv, for me it was extremely shocking to see that a country that's so developed and so modern as Israel is basically limiting its citizens the usage of water, and everyone has if you rent an apartment in Israel, you have your water bill and you have to report how many people lives in your household. So you have an allowance of how many cubic meters of water you can use a month at a certain price. If you cross that limit, if you go above that allowance, the price of water skyrockets. So they are really crazy about it because obviously they are one of the most water stressed countries, and they spend an awful lot of money to change this to make sure that they have enough water for everything, for their economy, for the residents, for all sorts of purposes. And my friends who lived there said this wasn't the case 10 years ago. So this is new. This is something that they had to adopt to very quickly. So Israel invested billions of dollars into desalination plants, the infrastructure of the water network and the pipelines within a couple of years' time. And if you take a look into the tendency, what happened to Israel in terms of the climate, rainfall, and that kind of stuff, and how this changed within just 10 years, these kind of short-term changes are about to happen in other regions in the world as well. So what I would say is that what happened in Israel is like a model of what is about to happen elsewhere. And seeing the amount of investment literally flown into water there, I think this is about to repeat in other places. And if you bring up any of the balance sheets or the investor presentations of those companies whose business is water, whether it's desalination, filtration, infrastructure, pipelines, pumps, valves, anything, they also keep repeating the same situation, that water is becoming increasingly hard to access. And I think all in all, I think the market has been very slow to react to this. Just like 5 years ago, electric vehicles wasn't such a hot topic than it is today. I see water to be a very hot topic in a couple of years' time, when a few events like what happened in South Africa, the day zero, when in Johannesburg, they had to actually close the taps to make sure they have enough water for the most crucial areas. But yeah, ultimately, if these kind of things happen, new companies gonna recognize the possibility, the opportunity to enter into the field. So there will be new competition, more money flowing into this whole industry. And at the moment, now, I think it's pretty much still an early bird opportunity.
That was going to be my next question: is how soon do you see this realizing itself as an investment opportunity? Because I think I saw one of the comments in response to your post was how being early is pretty much the same as being wrong.
I remember that comment. It came from a good friend, actually. With that guy, we always have extremely good conversations. We're usually on the same page. But yet, I would disagree with the statement that being early is actually being wrong. I think being early is just another form of taking on more risk. So the earlier you move, the higher risk you take. Because if you move when everybody else moves, and when the trajectory becomes obvious, then obviously you miss the opportunity, because by then the prices are already high, the entry is already more expensive. But to be honest, if you look at those companies like Xylem or Panther, they're already trading above 40, 50 PE. They are already in classic terms. Obviously in today's market, we can't really talk about classic terms because everything is just evenly overpriced. But still, trading at a price per earnings ratio of 40 is considered expensive. So the market already highly prices these companies, these opportunities.
Right. So let's now shift gears away from the specific and talk more about your communication style. Yes, your style of communication is both informative and humorous, really fun to read, but not frivolous in content. What are you aiming for in the communications with your copiers and followers?
Basically, I decided to go down this route and write like I speak and write like I think, and you just write out myself what I'm actually honestly thinking about topics. Is that this is how you communicate to others. I mean, seriously, if you want to achieve something, if you want people to listen to what you are about to say and what sort of message you want to send across, then you need to pick a shape and a form that resonates with people. And the sense of humor is something that resonates with everyone. I like to think that I've been gifted with some generous scope. Sometimes my wife says that sometimes I'm trying too much, I'm trying too hard to be funny. But back in the day, when I started writing my posts on eToro, and I always asked her to read them, to proofread them, not to grammar errors or this kind of stuff, but for the style. And sometimes she came back to me and said, too much. Just take it back a bit. So yeah, all in all, I just try to talk to others through these posts and analysis, even if it's about some dry topics like, a balance sheet or an earnings report, that we are all sort of working on this field. Like we are all involved in finance and the stock market and with companies and investments. And let's be honest, this is not a sexy topic. This is a boring stuff with numbers and, estimates and projections and this kind of stuff. But it doesn't have to be. After all, these are companies run by real people, meeting with real life situations. They have to real life challenges they need to tackle. So you can easily put yourself in their shoes and think about what the CEO might thinking, and just write it down, because sometimes it makes sense.
Yeah, I would describe your writing style as always being sincere without always being serious.
I think that's very good. Actually, bear with me for a second. I take a note of this. Yeah, absolutely.
I mean, I appreciate that style. And on that note, nipple twisting seems to be a theme you return to over and over again
Yes,
in your
I
posts.
know.
Now, hold on. Mr. Market might twist our nipples, you say. And then in another post, we've had some nipple twisting weeks in the portfolio,
Yes.
etc., etc. So my question is, do you particularly enjoy having your nipples twisted? Or perhaps do you enjoy doing the twisting of said nipples?
Not anymore. Can't confirm nor deny. Uh, No, actually, I realized that every time I put down nipple twisting or nipple twistedly, or if I try to, I'm looking for a phrase to substitute it, because I don't know, for me, it just so perfectly describes the situation. If you connect the market or whatever happens in the market, the pain and the misery with that single act of twisting a nipple, it just works. But yeah, I need to take a break and don't use it for about, I don't know, 6 months or something.
Well, I'm now following you, and it'll be good to keep abreast of your titillating posts. Indeed, you've got 16 times more followers than copiers. I wonder, I haven't done any research into whether that's a normal ratio, but it suggests to me that people enjoy your commentary and may be waiting to copy you when they see sufficient months of steady returns. Do you think that's fair?
I think it's fair. If we come back for a second to that part of the conversation about how could someone look at me if they see the huge numbers at the beginning and the dip, afterwards, which is still a bit tricky because that dip is still an average return of 5, 6, 7% at a month. But for anyone else, it would be considered as a good return. But for someone who delivered high double digit returns previously, this seems like a disappointment. So they might just wait to see which direction, how things pan out. If I was just lucky, if I can maintain these numbers. And as for the ratio of followers versus copiers, very recently we had a conversation about this, and there's a Telegram forum run by eToro for PIs. So a few hundreds of us, only PIs, can discuss, all sorts of PI things. And someone brought this up and asked around the question, what is the percentage of copiers compared to your followers? And it turned out that I'm in the middle. So based on the answers that all the fellow PIs gave in this forum was for every 100 followers you got 2, 3, 4, maybe 5 copiers. So having 77 copiers out of 1,256, I think I'm still in the middle.
I saw a post from about a month ago which includes talking about what you did well and what you didn't do so well. There's a section called Coming Clean, which is very Warren Buffett of you to air your mistakes in public. Here's a quote. I have made a few mistakes lately that I'd like to give some insights to, just for the sake of honesty. First and foremost, I didn't put my money where my mouth is. Well, I did, but it just wasn't enough, as it turns out. I've written numerous updates about how the current economic situation indicates that the party might either slow down or come to an end. My rotation into cyclical stock, energy, oil, etc., did come a bit too late and a bit too thin. Is that something you often do? You're quite happy to discuss things you didn't maybe do optimally?
Absolutely. I mean, I think it all boils down to the age-old concept of timing the market. It's impossible. You can't time the market. You have your ideas, you have your conclusions about what's about to happen, either on a market level, like in the system level, or within a certain industry, or around a particular company. But the market is, we all know how Mr. Market works, like, up, down, day in, day out. It's unpredictable. This whole unpredictability makes investing such a beautiful and yet, it's very challenging endeavor.
I think copiers will appreciate that, certainly more than PIs who do what really looks like a mistake from every angle, and yet the PI seeks to justify it somehow as a genius move that, for whatever reason, didn't quite work out or doesn't look like it. I think if you're open and honest, people respond to that.
Absolutely. This whole relationship between me and the copier, between any PI and the copier, is built on trust. I mean, someone comes with their cash and trusts you with that cash to make more cash out of it. You wouldn't necessarily trust some of your friends with your cash and ask him to go to the stock market and make more of it. But in eToro, a total stranger comes, sees a few of my posts, sees my results, and decides to chuck 5 grand, 10 grand, 2 grand on me as a complete stranger. So not being honest with these people who decide to take this risk with me would be, for me, it would be absolutely unacceptable. So that's why I try to be as transparent and as honest as I can, because there's nothing wrong with this game. You can't be perfect. You can't know it all. Nobody has a crystal ball. Even as you said earlier, that it was very Warren Buffett of me. Even he admits in some of his shareholder letters that back in the day he was wrong possibly 6 or 7 times out of 10. But when he's right, that's when we made the money. So being wrong is part of the game.
Okay, so in case we haven't fully addressed it so far, we haven't painted a picture, how would you describe your style of investing generally? And what elements of it have we not considered so far in this chat?
Okay. Essentially, it's a contrarian value-seeking investment strategy. So I'm always looking for value, and value always comes from misunderstanding and mispricing. Because the market on its own, it comes from psychology. I studied psychology back in the day. People are on an individual level very easily can make decent decisions, can evaluate the facts, and then choose the right outcome. But when it comes to group thinking or herd mentality, when there is a lot of people together, people tend to follow the majority. The majority doesn't necessarily right. So this is how the stock market essentially works. My investment strategy in its core is basically to look for these situations when the pricing follows the majority, but the majority is wrong, and then put my money on the other side of the trade. And I am wrong many times, not because my analysis is wrong, but because Mr. Market is just stronger. It can maintain the price action to the opposite direction for much longer than it's comfortable for my risk tolerance. But many situations, and this last year shows, my analysis turns out to be right, and it's profitable to go against the herd. So my investment strategy is basically to be a contrarian, always ask questions, and if I find something that's worth digging into, then I do, and if it still justifies, I put it in my portfolio.
And tell us the extent and method of diversification and hedging that you employ.
Okay, basically, I look at the diversification as comes from not I look at it this way. Bill Ackman, the fund manager, looks at that way, and I really can totally relate to that and agree to that. That diversification is basically an insurance against ignorance. The more you research, the more you understand, the better you can manage risk. The lower the risk you can take. The more information you have, the better decision you can make, basically. I usually aim to have like 10, 15 positions in my portfolio. These months, in the recent months, especially because of the move to Mexico and the other life changes, I can't have this luxury, the time to put into my analysis to that depth that I used to be able a year ago. So now I basically diversified my portfolio a bit further to compensate, to balance out this. So I would say I don't think I would ever go above 40, 50 positions, because I think that's over diversification. That's just basically takes away the possibility, it leaves money on the table. So if you're confident in a company, especially long term, and you're happy to invest in that company long term, then splitting that money up that you would otherwise put on that company and spread it out among other companies, just basically it's not the right strategy.
So 10 positions is more common than 40?
For me, I would say if things settle down in Mexico, and I will be able to allocate the same amount of time in every day that as I was able like a year ago when I had 10, 12 positions in my portfolio, I would probably go back to that strategy, especially because I feel much more confident to know exactly that if I have 15 companies in my portfolio, I am sure that I'm the top of my game. I can tell you everything about each company on a daily basis, what happens around them in their finances, news, anything. When it's up to 30, 40, I know exactly what's going on with the companies. I get the big picture. I know I can tell anyone why did I invested in a certain company, what made me to make my decision. But I might not be as up to date and say, have you seen the press release yesterday from Wuxi, or from Nano Dimensions? No, I missed it because I had no time to check it on a daily basis. So yeah, in terms of diversification, it's always a matter of how much time and energy I have to actually put the effort in to dig in, and therefore manage the risk around the portfolio.
The only mention I see of hedging is in your bio when you say hedge against risk via short positions and different asset classes. You're not currently shorting anything?
Not right now because it's extreme. Last year, so the big money came from shorting airlines, shorting a few companies. That shorting a company in this market environment is basically just pissing against the wind. It's because the market, especially the retail side of the market, is so strong. So the pressure, the upward pressure on the prices are so strong that even if your fundamental analysis is correct and the company is overvalued, like take Tesla as an example, going short on Tesla, as we've seen a couple of times, can so easily burn you, and it doesn't justify the reward. Last year it did. The risk reward profile was much better for shorts, but since then, since capital is flowing into equity because people have no other place to spend their money, shorting is much riskier. And the reason why I'm not shorting right now because I don't see in the foreseeable future I don't see an event that could change the direction of the market. So as long as this upward pressure exists or persists, I'm using different hedging techniques, like actually investing in REITs or commodities as an inflation hedge. So here, basically, yeah, that's the theme.
Let's talk a little bit about your copiers. Who should copy you? Who shouldn't copy you?
The first one is easy, everyone and their mom. Uh, on a more serious note, so basically, everyone who wants to get exposure to sectors and industries that they are not comfortable with, like these not sexy sectors like energy or utilities or water, actually, or for that matter. I strongly believe that what again Warren Buffett puts away in the circle of competence. Everyone should invest in within his or her circle of competence. If you know tech stocks, if you know crypto, if you understand crypto, sure, go for it. If you don't understand how an airline works, how an airline makes its profits, and what are the unique risks of an airline, leave it to someone who understands. So that's the ultimate answer to the question is that yes, anyone who wants to get exposure to these sectors are absolutely more than welcome to come on board, because that's what I do most of the time, focusing on these undervalued sectors. Who shouldn't copy me? Basically, I see there are a few people, both in real life and in eToro, who, if they see red numbers, their left eye just starts to twitch. Some people just can't handle the swings of the market. And it doesn't matter how vocal I am or other PIs about, the risks and the possibility of turning into red for a certain period. It happens. It's part of the game. And because of my contrarian approach, it happens to me more often than to others. So if I make a contrarian bet on a company, I do it because the market has a different opinion, and chances are that it's going to be in a red for a while. Don't copy me if you can't handle these swings, if you can't accept to see the copy value to be in a 1, 2, 3, 5% red for a few weeks.
Is there a right way and a wrong way to copy you?
Yeah, definitely. The wrong way. So if someone decides to copy, comes on board, checks on $200, $500, $2,000, it should be really determined by the individual circumstances. But once you pull the trigger, stick to it, because the worst thing that you can do is to jump out, as I said before. The market moves against us, goes down 2%. You pull the trigger, you liquidate the copy. You lost 2%. 2 days later, the portfolio is up 4%. So stick to the guns. In my bio, I say 6 to 12 weeks. Actually, I might change that to 6 to 12 months. So seriously, that might sound a bit big jump, but yeah, if the wrong way to copy is to jump in and jump out, jump in and jump out.
Yeah.
The other thing is that people with other PIs, we keep talking about copiers and copier behavior and why people decide to copy or leave or etc. And it's so interesting when you go down, like it was a big dip in March, you go down 15%, you would expect people are panicking and leaving here. They don't. They stick around. They stick around and they wait until they go back to zero, so being even, and then they jump out. That makes no sense at all. So the fact that my or someone else's portfolio went down in red and then came back again shows the possibility, the resilience of the portfolio to turn back around and generate profit. So jumping out just before you could actually see profits from your copy again makes no sense.
We may have covered this slightly, but the next question I have here is what role should you as a PI play in a copier portfolio? And describe that ideal portfolio with you in it. I think your answer is going to be, as you said earlier, if somebody wants exposure to a different bunch of asset classes, that would be your role in it. Yeah.
Absolutely, and hedging. It's something like that. It's you said in the beginning of our conversation that you see you go through profiles on eToro and you tend to see the same type of messaging, the same type of information, the same type of portfolios. Now I do the same. I 9 out of 10 or even 99 out of 100. I see a portfolio and it's full of tech, it's full of EV, it's full of green energy, it's full of crypto and Palantir. It's you can if you wake me up in the middle of the night, I can tell you the 10 companies that can be found in almost everybody's portfolio on eToro. So, but this is not diversification because you're being focused on so few sectors and that's actually a huge risk, because if something happens to these sectors, like we've seen in the beginning of March, then your entire portfolio is exposed to this kind of danger. So having me in the portfolio as a copy trade balances out this market risk, this sector risk, because being invested to value stocks, cyclical stocks, commodities, precious metals, in some ways it's a hedge. So having these kind of stocks in a 10% in everyone's portfolio can act as a counterweight if things turn out to be sour for those hot sectors. So yeah, pretty much as a hedge and as you just perfectly put it, to get exposure to areas that they would otherwise not invest in. Energy, for example, you'll blow tech out of the water this year. Energy is having a very good year so far, and yet very few people has energy in their portfolios. They're still sticking to tech. So yeah, the market changes, the market rotates. Having a couple portfolio is a great way to get exposure to these kind of changes before they happen.
Okay, so moving on to the final section of our chat here. Can you tell me what changes would you like to see on eToro? Maybe apart from adjustments to the risk score, as you mentioned.
Yeah, that would be nice, obviously. Okay, this would be more like a fun thing, and don't take it serious. I would love to see a reverse copy portfolio, a reverse copy feature. And this is a joke among PIs. If you wander around on eToro, you see people who are just doing a very bad job in terms of returns, and they are in deep red. And imagine if you could copy the other side of their trades. So because they are much more consistent in making losses than how good investors are. How
I know what you're saying.
I messed this up.
They're consistently bad, so you would love to be able to short these bad investors.
Exactly, basically a possibility to short people. So instead of shorting companies, to short people. On a more serious note, I would love to see option trading on eToro, because options are the real thing when it comes to hedging. So if you want to hedge your long positions with either puts or any kind of composition of holding stocks and actually writing or getting options on the other side of the trade, that's the real way to hedge stocks. That would be fantastic. And adding more assets, like I know they are already one of the best when it comes to the overall portfolio in companies and markets. Sometimes I make a research, I come across a company, I dig in, I find, oh my God, oh look, this is a great company, I would love to invest in them. Let's see if they are on eToro, and they are not. So seeing an expansion on the overall portfolio would be absolutely awesome as well.
If you were a copy trader, what would your approach be? How many PIs would you copy? What would they look like?
I would probably copy 3 to 5 PIs. Considering the size of the market, the number of asset classes and industries and segments, I would say that one can comfortably cover like 1/5, 1/3 of the whole pie in his or her competence, as we mentioned earlier. So I would probably copy someone who is absolutely on the top of his or her game in tech or the hot stocks and what's going on right now, what moves the market. I would copy someone who is much more like an old school value investor, cyclical stocks, energy, utility, etc. I would copy someone who is into commodities, copy someone who is into forex. So actually, obviously, because since cryptos, forex, so traditional currency trading is pretty much dead. But yeah, I would definitely pick someone who is on the top of his or her game and in this kind of asset class. So I would basically base my decisions per asset class, actually.
That's very interesting. I saw somewhere on one of your posts that you said you're not big into self-promotion, or you were downplaying your willingness to promote yourself or talk yourself up. Maybe that doesn't come naturally to you. My question is, I see within eToro, there's a kind of the rise of the professional eToro investor. There's these suited guys with teams of people around them who look the part, and they're making videos and they're doing webinars and Q&A sessions with their copiers, and they're really attacking it like it's a profession. Are you ever going to go down that road of being more visual?
I'm planning. It's on my radar. But if I do, I probably look the same and taste the same as my posts. So I can't imagine myself. There are a few guys who I follow and who are really, as you said, attacking it and really good at it to paint a picture, to sell a professional image. I don't think putting on a suit and standing in front of a whiteboard is what makes someone professional. It's more like the way of thinking and the way of acting, especially with money. So I definitely plan probably for Mexico. So once I'm settled in, have a nice background, and I have the capacity, and it doesn't take away time from analysis, and doesn't damage the portfolio, managing the portfolio, managing other people's money. I would definitely sit down and do the same like I do in my post. Just sit down and talk in the same style. Hopefully, make it spice it up with a little fun.
What other PI would you say you know the best on a personal level?
Oh yes, I was waiting for. I was hoping for this question because there are a few friends. We have a weekly poker game with a few of the other PIs. We really made. I hope by now I can call them friends. And I forgot to tell them that I'm coming to this podcast, and I was maybe thinking of playing with the idea to mention them because they really deserve it. So first of all, ladies first. Her username is Emeriturad Lakasi. Sorry, sis, if you listen and I pronounced it completely mispronounced. It's Cassia. She's brilliant. She is the way how she analyzes companies. She's the opposite. She's not like me. She's not into value as far as I'm concerned. She's more into the hot things, tech and everything that, as I said, moves the market. But we've sort of met when I was reading her analysis, and I was thinking like she's almost like me when it comes down to in depth and looking into the logical reasons behind the company. Vlad, Vlad 35, Vlad Daniel. He is again a top-notch investor. I follow him closely. He's also in the poker rig. He takes away our lunch money every single poker game. He's just so cool with money. In this year, I would say because of the market downturn in March and April was also, let's say, nipple twisting so far. He could manage to stay afloat and stay in green, despite his portfolio is also fairly heavy on more popular picks. And also a friend Carlos C. Figueroa 1982, a good friend Carlos, also a regular in our poker games, again being up more than 10% this year, completely beating the market despite the downturns. So yeah, all these people are definitely must have been mentioned.
Well, that's amazing to think of a bunch of PIs getting together to play poker. I assume you've never met them in real life.
No, never. We only know each other from eToro, from actually just stumbled upon each other from posts and comments and started a conversation, and it turned out that we are on the same page on many many levels. We can bring different viewpoints to the table and talk about them, not like most of the conversations go down in the comment wars, sometimes on eToro. So in a very decent way. We never met in real life, but we can call each other friends by now, definitely.
Tell me a little bit about your best and worst investments.
Okay. Worst investment decision, just from the last 12 months, the memories are fresh. I was shorting GoPro when I really shouldn't. I'm a big critic of GoPro. I've written numerous analysis on why GoPro is destined to fail. I have one of these been actually on Seeking Alpha. It blown in my face. I was very convinced that my analysis is correct, and I used the leverage, very high level leverage, to short GoPro.
Did that happen on eToro?
Yes, it did. It did.
Is your position on GoPro still the same? Hasn't changed now that they have a subscription model?
No, it's especially because of the subscription model. I think that people hugely misunderstand the promise that GoPro made and the marketing that GoPro painted about the subscription model, and the way how GoPro packaged the subscription model to sell the latest flagship camera. So basically giving it away for $50 cheaper if you go for the subscription. So they thrown this subscription in people's face for free. And then they put it in the earnings report that their subscription base is growing. But this growth is not organic. It's not natural. It's forced.
So still not a fan of GoPro?
Still not a fan. Yeah, don't go down that lane. I could talk about GoPro for hours.
I get that impression. So give us the let us know about your best investment since you've been on eToro. Probably Hertz or something.
It was Hertz. Yeah, it definitely was Hertz. Not because of the amount, because of the numbers, because it wasn't that big. It was a leveraged short because I was, as I said earlier, I was fully convinced they're going to give them file for bankruptcy. And they just gave it away. Carl Icahn, activist investor behind Hertz, he's infamous about eating CEOs for breakfast. So if you go as a CEO on one of the companies that Icahn backs and he doesn't like you, you are fired within 6 months or within a year. So he ate about 3 or 4 CEOs in the last decade, and then the last CEO, she came on board in 2017, and Icahn loved her. So she was still on the chair after 3 years. And just before, when the news was full of Hertz is about to file for bankruptcy, the CEO decided to hand in her resignation and leave. So the CEO, who the biggest shareholder loved, suddenly decides to back out of the company. And I couldn't understand why. And then I looked into the bankruptcy law in the US, and I realized that an acting CEO cannot be the one who represents the company in the bankruptcy court if it goes down to bankruptcy. So what they did, they put a puppet, a guy who never been a CEO. They put this guy on the CEO chair. The market cheered like, "Oh my God, Hertz got a new CEO. They're gonna avoid bankruptcy." No, actually, it was clear that by this little maneuver, this little move, they actually removed the CEO from her chair, so she was freed up to go and represent Hertz on the bankruptcy court. And they replaced her with a guy for that 12-month period. And they put this in a news article. They put it that the CEO who is stepping down is remaining with the company for 12 months in a special advisory position, special consultant position. So that was shouting clearly, loudly that they are about to hand in the paperwork and file for bankruptcy. So I went short, big short, actually huge leverage, and then they filed for bankruptcy within 2 days.
And as a Bill Ackman fan, I'm sure you enjoyed sticking it to Carl Icahn.
Absolutely. It wasn't really, I really tried to always be neutral and not to make emotional attachment to any sides of the trade, not to love a company or hate a company or anything. But yeah, that was a side, definitely a bonus on the side. I love this trade, and consider this the best trade because of the thinking pattern. This is why I love investing, because sometimes you can spot things like this. You can spot something that the market completely ignores or doesn't, realizes that it's happening, and it just feels good. It feels good when you are right and the entire market is wrong. I know it sounds, a bit might sound a bit awkward, but in this game, definitely part of the game. Plus, you make some money on the side.
Okay, well, Lavrinyuk, we've been talking for ages. I've got a huge editing job to do to pare this down to 1 hour.
Sorry about that.
But it's been great fun talking to you. Thank you so much for this conversation.
The pleasure is mine, and thank you very much for having me.
A very wide-ranging chat this week with an entertaining PI. Of course, the 7 land borders Hungary enjoys are Slovakia, Ukraine, Romania, Serbia, Croatia, Slovenia, and Austria. But I am sure you already knew that, learned listener. In the next episode, we are honoured by the arrival to the clubhouse of eToro themselves, in the form of the head of investments, including the PI programme, who tells us more about their plans for global dominance.
So the Popular Investor Programme's vision is to build the largest marketplace in the world of talented and experienced investment managers and investment strategies for everyone to choose and pick from.
Plus, I get the chance to point out all the improvements that have emerged from the ideas factory that is Copytraders Club. That's all from me. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.